Welcome to the deep dive. Really excited for today. We're plunging into some pretty significant momentum we're seeing happening in both crypto and the equity markets. This is July 2025.
Yeah, it's a fascinating mix right now.
It really is. You've got technical breakouts, some major regulatory shifts happening, and these macroeconomic catalysts all sort of feeding into it.
A real confluence of factors.
Definitely. So today we'll be looking closely at Ethereum surge, digging into some altcoin opportunities, checking out the U.S. equity indices, and seeing how this AI revolution is, well, just supercharging tech revenue.
That's to cover.
Right. Our mission, as always, is to pull out the most important nuggets for you, give you that comprehensive outlook you need to navigate things. Okay, let's unpack this. And I mean, where else to start but Ethereum? It's absolutely become a focal point.
It really has.
Seeing this really robust upward path looks like potential for new all-time highs, definitely. Seems driven by what looks like a multi-year consolidation finally breaking out, and also these favorable U.S. legislative changes we mentioned.
What's fascinating here is just the speed, the velocity of Ethereum's move.
Yeah.
Since, November 2024 has been a sharp rise. Kind of reminds me of that run-up back in May 2021.
I remember that. Explosive.
It was. And you see this often, Bitcoin moves sideways, maybe consolidates.
And the money flows elsewhere.
Exactly. Capital rotates into altcoins.
Yeah.
And Ethereum has actually broken through all the weekly resistance zones we were tracking.
All of them.
Yep. And crucially, those old resistance levels, they're now acting as future support. Old ceilings become new floors.
That's a very strong signal, technically speaking.
Absolutely.
And speaking of technicals, our source has brought up something called a rainbow pattern for Ethereum. Can you shed some light on that? And how does the yearly open around $3,330 fit in as support?
Yeah, the rainbow pattern.
Yeah.
It's a visual thing on the chart. Basically, you see price action fanning out, creating these bands.
Like a rainbow, hence the name.
Right. Fundamentally, it signals strong upward momentum after buyers soaked up all the selling pressure at a certain level. Then you get this explosive breakout.
Ah, okay.
And that pattern was pretty key in pushing Ethereum past those resistance zones we just talked about. Now, that yearly open, $3,330, that's critical support.
Psychologically important too, I bet? January 1st price?
Exactly.
Yeah.
Psychologically, technically significant, should hold strong on pullbacks. And looking ahead, now that $3,300 and $3,500 resistance is broken, there's not much in the way until maybe $4,100.
And then potentially those all-time highs near $4,867.
That's the next major zone, yes.
So a pretty clear path, potentially. Now, the sources also highlight this, what they called a massive ascending triangle on the quarterly chart. That sounds significant. What does that tell us long-term?
Oh, this is a big one. Really exciting long-term signal. Imagine looking at a chart going back to 2021.
Okay.
You see Ethereum's price making this giant triangle shape.
Yeah.
The bottom line slopes up higher lows, meaning buyers are getting more aggressive over time.
Buying the dips at higher prices.
Right. But the top line, around $4,000 flat.
Yeah.
It's been hit, tested again and again, like a ceiling.
How many times?
3 times over the last, 2.5 years. So this repeated testing, plus the higher lows, it means energy is building. Serious energy.
Like coiling a spring.
Precisely. That's the main takeaway. This massive pattern, $4,000 resistance, tested 3 times. It's setting the stage. If we get a confirmed breakout above $4,000,
boom.
could be. That pent-up energy could drive Ethereum all the way to $10,000.
Wow, $10,000.
Yeah, think back to Bitcoin's big consolidation breakout in 2020. Led to, a 330% return? Similar kind of potential energy here.
Okay, a potential $10,000 move is definitely something to watch. So for someone thinking about this, how do they approach trading, risk management, and how much of this is just technicals versus these regulatory shifts fueling it? Can you even separate them now?
That's a great point because, no, you really can't separate them entirely. They're working together. The technicals give you the map, the structure. But the regulation, which we'll get into, provides the fundamental fuel, the rocket boosters, if you will.
Okay.
Strategy-wise, risk management is absolutely key. If you got in long around $2,500,
yeah,
the advice was definitely take some profit around $2,300 to $3,500. Lock it in.
Makes sense.
For re-entry, maybe look for pullback to that yearly open, $3,330. Use that strong support. But jumping in fresh right now, around $3,735. The risk reward isn't great. Bit stretched short term.
So caution on new longs right here.
For leverage trading, yes.
Yeah.
But if you're holding spot long term, that $10,000 upside is still very much in play, riding both the technical wave and these fundamental shifts.
And looking at those higher timeframes, weekly, monthly charts, Is this rally looking sustainable, or is it maybe overextended? Could we see a big correction?
Well, the charts, especially weekly, 3-week, monthly, quarterly, they do show the rallies, let's say, extended. It moved up
Yeah.
fast. But it seems sustainable because the underlying structure, that breakout, is so strong. The 3-week candle, though, is quite extended. Might mean a pause, maybe some sideways action for a couple of
Let's
weeks.
take this a breath a bit.
Yeah, exactly. But the overall picture, breaking key weekly resistance, still points to more upside in August. $4,100 is the next logical target. And longer term, that quarterly ascending triangle, that $10 K potential after breaking $4,000. That's the main story.
Okay, here's where it gets really interesting, because it's not just charts. The whole regulatory scene in the U.S. seems to be shifting dramatically. We're hearing about the Genius Act, the Clarity Act, even the CBDC Anti-Surveillance State Act passing the House. How are these actually impacting the crypto markets on the ground?
If we connect this to the bigger picture,
Yeah.
like these are huge. They provide something the market has been starved for.
Yeah.
Clarity, certainty.
Yeah, the lack of clarity has been a major headwind.
Absolutely. So these acts are designed to smooth the path for institutional money, provide clear rules, reduce the barriers, the legal risks for crypto firms operating in the U.S.
So less guesswork for institutions.
Right. The Genius Act, specifically, that helps stablecoins, creates rules for them. The Clarity Act helps crypto projects generally try and shield them from arbitrary SEC enforcement actions by setting up a clearer framework. Fewer surprises, more predictable rules.
So this feels like a real U-turn from the Gary Gensler SEC era.
It's a significant shift, yes.
Does this mean some of those offshore firms, the big exchanges, might actually come back to the U.S., and what would that do?
That's exactly the expectation. This shift directly counters the constraints we saw before, which really choked off U.S. capital, especially for altcoins, after things like FTX.
Right, the doors kind of slam shut.
They did. Now, with firms like Binance, Bybit, potentially having clearer rules to follow, we could see a fresh wave of capital coming back into the U.S. market, flowing into altcoins.
Reopening the floodgates, maybe?
Could be significant. It boosts liquidity, boosts price momentum across the board.
Yeah.
And yeah, Ethereum's recent strength, it's definitely partly thanks to these legislative tailwinds. It cements its position as the leading altcoin in this more welcoming environment.
Okay, so institutional money finally feels more comfortable. But are they buying Ethereum directly, or is their focus maybe narrower?
That's an important distinction. Ethereum benefits, no doubt. Its blockchain is the foundation for so much stablecoins, DeFi, NFTs.
The infrastructure layer.
Exactly. So increased activity benefits ETH. But the direct focus of regulatory adoption right now, that seems to be stablecoins.
Ah, okay.
Institutions are looking at stablecoins for things like payments, treasury management under this new framework. So ETH benefits indirectly from the utility, but stablecoins are the direct play for regulatory compliance.
Got it. So, given all this, for an institutional player or even just someone trying to figure out where the smart money might go, what are some actionable takeaways? What should people be watching?
Okay, several things. First, obviously, watch how these bills actually get implemented. Keep an eye on onshoring firms moving operations back, stablecoin issuers like Tether, USDC, how they adapt. That'll be a good proxy for market stability.
See who's complying.
Right. Second, watch for announcements. Crypto firms, maybe even big ones like Binance, saying they're re-entering the U.S. or forming new U.S. partnerships. That signals fresh liquidity coming in.
Makes sense. Any specific altcoins that might be particularly well-positioned because of U.S. ties?
Yes, sources suggest looking at coins with strong U.S. roots. Think XRP from Ripple, XLM from Stellar, both based in San Francisco.
Home field advantage, maybe?
Potentially, yes. Their U.S. base helps. Also, there's been talk about positions built by the Trump family's firm, World Liberty Financial. Coins like Link, XLM, SUI, AAVE, ONO, BNB, Solana, SEI, flagged as potential targets for capital flows under this new regime.
Interesting.
And you can use Ethereum itself as a proxy for the whole altcoin market, right? Watch the ETH-BTC pair.
Ethereum versus Bitcoin strength.
Yeah. If ETH starts really outperforming Bitcoin, say hitting 0.05 on that ratio, that signals growing confidence in alts overall. Might be a signal to increase your altcoin exposure. But again, remember, the bills focus on stablecoins, so view ETH more as the utility layer benefiting, not the direct adoption target itself.
Okay. And any other advice on timing? Finding entry points?
Well, for deeper dives on the regulatory nuance, the sources actually recommend an all-in podcast episode discussing the Genius Act, specifically the chat with David Sachs and Senator Bill Hagerty around the 38-minute mark. Worth a listen.
Good tip.
For positioning, look for those support retests, like Ethereum back near that $3,330 yearly open. Those could be good entry spots. Also, keep an eye on late July. You've got earnings season wrapping up, big tech reporting.
And the FOMC meeting, Fed decision.
Right, July 31st, plus Coinbase reports then too. Those events often bring volatility, which can create pullback opportunities for better entries.
So potential buying opportunities around month end.
Could be. So just to pull it all together on the regulatory side for institutions, these new acts, genius and clarity, they fill a void. They provide that proper framework to follow, as one source put it.
Clear rules of the road.
Exactly. Less fear of random lawsuits. Allows firms to onshore, bring operations back to the U.S., reopening access to U.S. capital markets that have been basically closed off for a couple of years.
Which means more liquidity.
Huge boost to liquidity, especially in altcoins via futures platforms. Institutional money can flow in more easily, less legal risk, more transparency, attracts new, fresh capital from the U.S. All of this amplifies upside potential, especially in rallies led by Ethereum.
Creates a safer environment overall.
A safer, more liquid environment for longer-term holds, especially in those U.S.-centric alts. And Ethereum benefits indirectly as the market leader.
Yeah.
This could be a 1 to 2 year trend of institutional inflows.
Okay, so the crypto side is, it's buzzing. Powerful story there. But what's really striking is how some of these same themes, investor confidence, tech advancements, seem to be playing out in traditional equities too.
Definite parallels.
Let's shift gears a bit. Look at the U.S. equity indices. Similar bullish setup, similar tailwinds.
Yeah.
So what does this all mean for those other altcoins we touched on, and where does Bitcoin fit in right now?
Right, so beyond Ethereum, specific alts look interesting. LANK shows a strong bullish structure. Sources see it targeting $31.
Okay.
XLM, stellar, that multi-year consolidation we mentioned. A breakout above 30.63 cents could see it run towards $1, even $2. Again, U.S. base helps there.
Right.
SUI looks poised for new all-time highs above $4.03, showing a clear bullish order block, strong support zone. AAVE is targeting $400 after breaking $325.
Lots of specific targets there. Any cautionary notes?
Yeah, the one mentioned with a bit of caution was ONDO. Faces potential supply inflation risks, apparently, which might dampen its appeal a bit, despite its U.S. operations.
Got it. And Bitcoin, the big dog. How's it looking technically while all this altcoin action is happening?
Bitcoin's kind of taking a breather.
Yeah.
In a sideways phase, bumping up against resistance at recent highs.
Which is pretty normal when alts are flying.
Right. Very typical. Capital rotation, like we said. Key support for Bitcoin is seen between $112,590 and $116,090. If it pulls back to that $112,590 level, that could be a high probability long entry.
With a tight stop.
Yes, stop loss suggested below $107,680, aiming for higher liquidity pools. It's more of a tactical short-term play right now, maybe not the same explosive long-term potential Ethereum seems to have at this moment.
Okay, makes sense. Now, shifting over to Wall Street, NASDAQ, Dow Jones, also looking strong. What are the charts saying there?
Very strong. Both NASDAQ and the Dow are showing bullish technical patterns, reflecting that risk-on mood. NASDAQ have that rainbow pattern again, like Ethereum.
Interesting similarity.
Yeah, indicates strong momentum. Also an inside daily candle failure, suggesting maybe a brief pause before breaking higher towards $23,378. That's about, what, 1.3% upside from recent levels?
And the Dow US 30.
Similar story. Inside weekly candle failure there, and a gap fill target up at $43,747. Signals potential towards $45,000.
Yeah.
So yeah, continued upward expansion seems likely for both indices. The whole market feels like it wants to go higher.
And earnings season is kicking off, right? We've got the tech titans reporting soon. That must be a massive factor.
Oh, absolutely. Huge catalyst. Provides the fundamental justification for these technical moves. You've got Tesla, Google on the 23rd, Microsoft on the 30th, then Apple, Amazon, and, interestingly, Coinbase, all on July 31st.
Wow, a packed end to the month.
Right. These are the companies driving the market cap. Microsoft especially has been looking strong technically, consecutive bullish daily candles leading into its report. And Coinbase, well, perfectly positioned to benefit from those crypto regulatory tailwinds we discussed.
So the overall picture for U.S. indices, particularly the tech-heavy NASDAQ,
Yeah.
it feels like this melt-up phase is just continuing. Price is just grinding higher.
That's exactly the read. Continued upside expansion through earnings season seems likely, fueled by expected beats from big tech, thanks largely to that AI revenue surge.
The AI factor again.
It's huge. Technical suggests capital keeps flowing upwards, probably without major pullbacks until earnings season wraps up around July 30th, 31st. And NASDAQ should keep leading, though. It's already up, what, 41% versus the Dow's 22% from recent lows? That's the tech and AI effect. It's a clear risk-on environment.
Speaking of AI, just how much is that really driving things? Can we quantify it? And what's the takeaway for, for us watching this?
It's a primary driver, no question. Very powerful. It's not just hype. It's reshaping business models. Look at NVIDIA projecting $150 billion revenue for 2025. That's up from $116 billion in 2024. That's massive growth.
Huge jump.
And you see companies like xAI with their Grok 4 model planning to buy 1 million GPUs. That's insane demand for AI infrastructure feeding directly into NVIDIA. So the insight for you is this demand props up NVIDIA, which in turn lifts the NASDAQ because AI spending touches so many tech companies. It's not just chips, it's software, cloud, everything. It's fundamentally changing the competitive landscape. Now, a word of caution is probably warranted here. After earnings wrap up, say post-July 31st, that also lines up with the FOMC meeting, remember?
Fed decision day.
Right. And there's talk of potential new U.S. tariffs around August 1st. That combination could trigger some profit-taking, maybe consolidation.
Plus, aren't August and September usually weaker months anyway?
Historically, yes. Seasonally weak period. We've seen it before. 2020 had that 10-15% pullback in September before a strong Q4. 2021 saw pullbacks in August before year-end gains. 2018 had a 7-10% correction that set up a big run.
So a dip could be a buying opportunity.
Exactly. Healthy pullbacks, maybe 7-10% NASDAQ Q towards $21,758 perhaps, S&P 500 towards $6,000. Those could be great spots to reload. Set up for potential Q4 melt-up. November and December are historically the strongest months. You could potentially capture 20-26% gains running into next February if history repeats.
Interesting seasonal perspective. Okay, finally, just quickly, the DAX, German stock market. How does that fit in?
Yeah, the DAX also shows some interesting technicals, a flat open gap suggesting a price jump that might get revisited. An inside weekly candle failure points to a potential pullback, maybe to $23,760.
Another potential entry?
Could be an entry there for a long position, looking for upside aligned with the U.S. indices. The DAX often follows the U.S. lead, so its strength kind of confirms that broader global bullish feeling.
Wow. Okay, that was a ton of ground covered, an incredible amount of information. Let's try and quickly summarize for you listening. We've seen Ethereum showing really significant breakout potential, potentially eyeing that $10,000 mark down the road. That's fueled by those powerful technicals like the ascending triangle, and just as importantly, those massive regulatory tailwinds in the U.S. We highlighted opportunities in specific altcoins, LNOLing, XLM, SUI, especially those with strong U.S. connections, benefiting from regulatory clarity.
Right.
Bitcoin looks more like a tactical play right now, sideways action, but with clear support levels to watch for entries.
Yep.
And then U.S. equities, particularly NASDAQ, look positioned for more gains, really driven by that AI revolution and strong earnings expectations from big tech.
The melt-up continues for now.
For now. So the key seems to be using these range strategies, understanding the technical levels, but also paying attention to seasonality, right?
Yeah.
Manage risk, look for those pullback opportunities, especially around month end and into the seasonally weaker period.
Absolutely. Discipline is key. Which I suppose this raises an important question for you to think about. How do you personally balance capitalizing on this clear momentum we're seeing right now across both crypto and equities with strategically preparing for those potential seasonal pullbacks we just discussed? And maybe even longer term, how does this new U.S. regulatory framework truly reshape your view on institutional crypto adoption and the whole financial landscape for the years ahead? Something to chew on.